And I think when people say AI right now and we're talking Mag 7, we don't think Alphabet, you think NVIDIA. And you said something in a note that I think is really interesting. You referred to NVIDIA as the metaphorical gas station fueling the AI phenomenon. Why do you think that is? I love that phrase, by the way.
Oh yeah, no pride in authorship. You can use it when you will, but I mean, it is the centerpiece of this AI phenomenon, and it's also a name that continues to be discounted in a lot of ways. Its last earnings or outperformed. They outperformed on a top line basis and bottom line basis. Top line, they generated $44 billion of revenue. To put that number into perspective, at the time, it was greater than the market capitalization of Target. Right, so Target, the name we all love in retail, its retail presence. But I mean, it is just it continues to defy doubters. It is that gas station fueling the AI phenomenon, and we just feel like there's just so much runway in front of it.
I love the perspective here, the trips to the moon. You don't think about revenue in terms of market cap of another company. Target is certainly one everybody knows and thinks of as being huge, and that's the quarterly revenue for Nvidia. So great perspective there.
Although it has grown to become the largest company in the world at an incredible rate, Nvidia is still expanding. Since its GPUs have become the standard computing unit on which many AI businesses have based their models, Nvidia is one of the main beneficiaries of the artificial intelligence AI arms race. Nvidia's stock is still expected to expand well over the next few years. Therefore, investors should still think about increasing their current Nvidia holdings in their portfolio. However, what sort of growth can investors anticipate in the upcoming 3 years? Let's investigate. Nvidia's prosperity is fueled by the expansion of data centers. Nvidia manufactures graphics processing units, GPUs, which are pieces of computer hardware designed to handle demanding workloads. GPUs were first designed for gaming graphics, hence the name, but they have since discovered applications outside of gaming, such as medication development, engineering simulations, cryptocurrency mining, and eventually, handling AI workloads. The fact that Nvidia is one of the main businesses benefiting from the enormous AI arms race is the main factor contributing to its success as an investment. Nvidia is the main beneficiary of the billions of dollars that many large tech businesses are spending on data centers in order to provide AI technologies that could potentially bring in money. Although 2025 is expected to set a new record for data center spending, the following year may see even greater increases. Take a look at Meta Platforms' statement regarding capital expenditures for 2026. As we continue to actively seek opportunities to bring additional capacity online to meet the demands of our artificial intelligence efforts and business operations, we currently anticipate another year of similarly significant capital expenditures dollar growth in 2026, even though the infrastructure planning process is still very dynamic. According to this quote, Meta will greatly surpass the $66 billion to $72 billion range it provided investors for 2025 capital expenditures in 2026. As 2026 draws near, a lot of the AI hyperscalers will probably use comparable terminology, which is encouraging for a number of businesses, including Nvidia. This expansion of the data center supports a forecast made by Nvidia at its 2025 GTC event. A third company calculated that $400 billion would be spent on data center capital projects worldwide in 2024. It is anticipated to increase to $1 trillion by 2028. What may investors anticipate from Nvidia's stock price in 3 years if that materializes? Nvidia made $115 billion in revenue in FY 2025, which includes the majority of 2024. This means that Nvidia received close to 30% of the expected data center expenditure. Let's assume that Nvidia can take 25% of the anticipated $1 trillion in order to add some prudence to our calculation. Because of this conservatism, the total data center build-out figure can be reduced, and Nvidia's data center share can be reduced by other newly released technology. That would mean that Nvidia would make $250 billion from data centers alone, but Nvidia can profit from other areas of the business as well. Even if Nvidia made $131 billion in FY 2025, a significant portion of its revenue still derives from sources outside of data centers. Its non-data center revenue would increase to $23 billion by 2028 if we assume that the remaining revenue grows at a rate of 10%. According to these estimates, Nvidia's revenue would increase by 84% from its current level to approximately $273 billion. The rise of Nvidia's revenue may or may not be correlated with the growth of its stock price, depending on your opinion of the company's value. but it seems a bit pricey to me. At the moment, Nvidia's stock is trading at around 60 times its earnings. Nvidia would generate $150 billion in profits if that dropped to 40 times earnings, and it could keep a 55% profit margin, which only dropped in Q1 as a result of the significant write-off of its H20 chips. Nvidia would have a $6 trillion market capitalization at 40 times earnings, which would put the stock at little under $250 per share. At that price, Nvidia would be a market-beating stock because to its robust growth. Because of this, I continue to believe that Nvidia is a great investment to purchase right now. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video. After a sluggish start to the year, Nvidia's stock has already risen by over 30% so far this year, thanks to a robust rally that started in early April. What the leader in artificial intelligence, AI, has to say when it releases its fiscal second quarter earnings on August 27th will have a significant impact on whether or not that momentum can continue. Last year, Nvidia's sales more than doubled, but it would be challenging to sustain that rate of growth. As consumers accumulate inventory and other processors start to emerge, the unquenchable demand for its top AI gear will inevitably decline. However, at its current price point, the IT behemoth is still a wonderful buy, even if it doesn't reach that level of sales growth. This data point should be monitored to determine whether growth is still robust enough to support purchasing Nvidia stock at this time. When Nvidia's China division was essentially shut down earlier this year, investors became fairly pessimistic, despite the fact that the company's stock had climbed dramatically over the previous few months due to a number of catalysts. The impact of missed sales revenue from China as a result of export restrictions was the source of concern. Nvidia took a $4.5 billion charge in the fiscal first quarter for its H20 inventory and canceled sales due to new rules restricting sales to China. Following the implementation of earlier export regulations, the H20 chip was created especially for the Chinese market. However, following more adjustments to trade and tariffs with China, the country now appears to be another driver of AI chip sales. According to recent rumors, Nvidia has placed an order for 300,000 H20 graphics processing units, GPUs, from Taiwan Semiconductor Manufacturing, a contract supplier. That's a significant quantity of chips. For comparison, in 2024, Nvidia sold roughly 1 million H20 chips. In addition to those sales, Nvidia's most potent Blackwell chips will be in high demand as data centers increase around the world. The $500 billion Stargate project in the United States and AI data center projects already underway with Saudi Arabia, Indonesia, and European countries will be supported by Nvidia systems. All of that leads to the precise things that investors should be watching when Nvidia releases its next earnings report on August 27th. The next wave of sales for Nvidia's top processors and software will be driven by the continuous expansion of data centers. This comes after a year in which Nvidia's record revenue increase of 114% year-over-year was aided by huge tech and AI companies. However, revenue growth has slowed from its original levels. Although it has continued to rise every quarter, the chart below shows that the quarterly rises have leveled off at roughly 15%. The most recent quarterly growth was then lowered to merely 10% due to the loss of sales in China. A growth rate of 75% per year would be achieved after 4 quarters in a row with 15% growth. For a mega-cap business like Nvidia, that is even more astounding than the sales growth. Investors should concentrate on that number from Nvidia's earnings reports. Nvidia will appear to be a cheap stock even at current levels if fiscal Q1 was an anomaly brought on by the disruption in China sales and quarterly growth picks back up speed. How long its growth runway can last will be the main question. Only CEO Jensen Huang and the commentary from the quarterly report are able to respond to it. Although investors should keep an eye out for those clues as well, the most crucial financial indicator to keep an eye on from Nvidia should be the quarterly expansion of the data center. Though it is by no means a novice, Nvidia has dominated stock market discourse in recent years. Founded on April 5, 1993, the company went public on January 22, 1999, following its initial public offering, IPO. Due to the 6 stock splits that Nvidia has had since its initial public offering, if you purchased 1 share of the company at its IPO, you would now own 480 shares. Despite being on the market for 25 years, Nvidia hasn't always been the soaring stock that investors have been seeing in recent years. As of this video, however, if you had purchased one share of Nvidia at its initial public offering, IPO, price of $1,200 a share, and kept it all this time, your investment would have been worth $85,378. For your position, that translates to a compound annual growth rate of somewhat less than 40%. Furthermore, it should be noted that Nvidia's dividend, which it started paying out in November 2012, is not included in this rate of return. Anyone's long-term gains would have increased if they had reinvested their dividends. These are astounding outcomes, and as Nvidia assumes a leading role in the development of artificial intelligence, it appears to have much more to offer. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.